Okay, all right. So we're gonna start again. Last week we had a great session. We talked about trends, right? So we spoke about if you want to get into trading, the things that you need to get into trading. I said you need a broker. Why did I spell it like that? That's crazy. Yeah. So you need a broker. You need Trading View. There are other platforms where you can trade from as well, but for this particular trading, we're going to be using Trading View for that. And all you need is a Wi-Fi. So you just need these three things, and obviously your trading strategy that will obviously help you get the entries that you're looking for. So we spoke about IC markets or under forex as part of brokers that we're going to be using, or you can use. I usually use on the IC markets. I've got Trading View. That's what I use for my analysis. Like you can see here right now, Trading View. That's what I use for my analysis, and I've got internet in my house as well. So, and MetaTrader is a place where I usually take my trades from. So MetaTrader is where I take my trades from. Like I said, anytime you go into the market, buyers are always trying to push the market up. Sellers are always trying to push the market down. We spoke about the candlesticks as well. So we spoke about the candlestick being the body of the candle, and then obviously it's got the wicks as well. When a candle is green or a candle wants to go up, it opens from the bottom and it closes at the top. So anytime a candle opens at the bottom and closes at the top, that's a green candle being formed. The wick is a representation of where the candle has been or where the market has been. It's not a representation of what the full candle is. It just tells us that when this candle opened here, it went down there and it went all the way up there. That was the highest point that it went. That was the lowest point that it went. But then this is where it opened and this is where it closed. That's why it's a green candle. The red candle, the same thing. It opened from the top, it closed from the bottom. But then it tells us that this was the highest point that the red candle went. This was the lowest point that the red candle went. But then it closed here, and that makes it a red candle. We spoke about the bullish market. Anytime the market is making higher highs and higher lows, that's a bullish market. We spoke about bearish market as well. Anytime the market is making lower lows and lower highs, that's a bearish market. It means that the market wants to go down. We spoke about consolidation market, the state where the candle or the market is confused, doesn't necessarily have a proper direction of where it wants to go. So we gave an example at this point. But in this particular place, the candle was confused. It didn't have any place that it wants to go. It was just bouncing. It went all the way to that place, came down here, went up there, came down here, went up there, came down here. Before it broke that structure, meaning it was struggling to find a direction, even though the market in general looks like it's an upward trend market. When it got to this level, it consolidated before it made a direction. It gave a clear indication of where it wanted to go. So we said that this part is a no trade zone, which we're going to speak about some more. So what are we doing today? Today we're going to speak about. We're still going to continue with the trend, and I may be able to start with indication of the market. But from the beginning, I said to you guys that the market is like a wave, right? It goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down. That's how the market moves. That's how it's going to be forever. There's nothing that's going to change how it goes. The fact that it goes up, it comes down. It goes up, then it comes down. Okay. But then when it's a trending market, when it's a bullish market, then that's where it's gonna make this, and then it doesn't break this anytime it's a bullish market. Right? That's how bullish markets move. This is how a bullish market moves. Let's make it green so it indicates that it wants to go to the top. So when the market wants to go to the top, it's always going to move like this. It's always going to move like this. Now, these things can either be here, be here, be here, be here. It can also be here, be here, be here. This can also be here. This can be there. But it's still the same thing. It's still the same analogy. It just tells you that the market is trying to do this. It's the same analogy. It's no difference at all. So if you go to the market and you see something like that, you don't get confused. You just have to determine where your highs are. And then once you determine where your highs are, you'll be able to know if the market is going up or is going down. So let's first start with the bullish market. Let's start with the bullish market or bullish trend. Let's say bullish trend. So when it comes to a bullish trend, like we spoke about last week, it's always going to move in this direction because it's trying to go up. It's always going to move in this direction because it's trying to go up. Let's make it a little bit cleaner. Yeah. It's always going to go up, right? So if this part is your lowest part of the trend, that's the lowest part of the trend. This part will be the highest point. At this point, if the market, when the market starts, right, you're not seeing anything from this point. You're not seeing anything. All these things are not here yet. So everything from here all the way to this point is not there yet because the market is starting, right? Or the trend is starting. So this was the lowest point. So if that's the lowest point and it went all the way to this point, it means that this point becomes the highest point. From here to here, that's the low and that's the high. All right, now let's go back to how the trend is looking, right? So that's the lowest point. That's the highest point. For every bullish trend, when the market wants to go up, there is going to be the low, the high. There's going to be a low, which is lower than this high, but it's higher than this low. So this point, so when the market was down here, it went all the way up here, and then it came here, right? But when it came here, this point is lower than this high, but then this point is also higher than this low. So it means that this particular one becomes a high because it's higher than this low, but this low is lower than this high, so it becomes a higher low. This point becomes a higher low. And the reason why this point is a higher low is because it's higher than this low, but then it's lower than this high. That's why this point is a higher low. Okay, so the market was low and then became high, and then a higher low was formed. But this point is also formed. But this point is higher than this low, but then it's also higher than this high. So this point becomes a higher high because it's higher than the previous high. This high, this is a high, this is a new high, but this high is higher than this high. That's why it's a higher high. And this is a low, this is a low, because remember what I said, the market is starting, right? From this point to this point. From this point to this point. This is a low. And this is a high. So this is a low, this is a high, right? So imagine this, right? This is a high, this is a low, this is a high. So high and low. Now this high and low comes back again here, right? You put it back here. So this is a low, this is a high. This is a low, this is a high. This is a low, this is a high. But then this low is higher than this low. So that's why it's called a higher low. But this high, which is the new high, is higher than this high. That's why it's called a higher high. So it means that this new high, which is higher than this, will also become a higher high because it's higher than this particular high. So this one becomes a higher high. And this low, which is lower than this high, becomes the new higher low. So this part, because it's higher than this high, this becomes a new high. And this low becomes a new low, a higher low, a new higher low. This becomes a new higher low. Then this becomes a new higher high. And then this becomes a new higher low. So that's how a bullish trend moves. It goes to the high, then it moves it goes from the low to the high, and a new higher high is formed, a new A new higher low is formed, a new higher high is formed, a new higher low is formed, a new higher high is formed, and a new higher low is formed, and a new higher high is formed, and a new higher low is formed, and a new higher high is formed. So this is telling us that anytime anything is bullish, right? For a bullish trend, bullish trends are made up of higher highs and higher lows. So anytime you're seeing higher highs and higher lows, you know that the market is trending bullish. Let's go to let's go here and let's see, for example, let me find a high in the market and then we can use that as an example. Okay, let's use this part for example, right? So this one is NQ. So if we grab our path 2, which is this tool, we spoke about the tools last week as well. If we grab this tool, we're going to start from this market, right? This is the lowest point at this point. This is the low, right? So this low created this high. And this high created this low. And this low created, oh, sorry, let me start again, because I think I double clicked on it. So you get your path 2. So this low created this high created 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 this low created this high, and then created this low, and then it went all the way to create that high. So anytime higher highs are being formed is an indication that the market wants to go up, right? Don't forget that anytime the market higher highs are being formed is an indication that the market wants to go high. Okay, well, let's continue with where we are. So bullish trends are made up of higher highs and higher lows. All right, cool. Let's put this one to the side for now, and then let's move on to yeah. Let's move on to bearish trends. Okay. So let's look at bearish trends. So for a market to be bearish, right, it means that it's going down, like we spoke about last week. So we're going to start from here. We're going to go there. Okay, we're going to make this one red so that we can have a clear thing to, talk about. So anytime a market is moving down, if the bullish trends are made up of higher highs and higher lows, it means that the bearish trends are going to be made up of lower lows and lower highs. So they are, remember what I said, it's just lows and highs in the market. It's just lows and highs in the market. For a trend to happen, you just have to replace the lows and highs with either high and high or low and low. So for example, bullish trend is a high and low, which is in the market, but then to make it bullish, you just have to add H in front of it, becoming a higher high and higher low. Same with bearish market. It's a high and low in the market, but to make it a bearish trend, low has to be put in front of both the high and the low, making it lower high and lower low. So if this is the highest point of the market, right? If this is the highest point of the market, high and low, remember what I just said, high and low. This point will be the lowest point of the market, right? This point will be the lowest part of the market. So what's going to happen? How do you get a bearish trend? You just have to put L before the H and the L. So it means that this is going to be another high, but this high is lower than this high. So it becomes a lower high, right? So this part is lower than this high. This is a high, this is a low, but this high right here, which is a high, which is a high because it's higher than this low, right? It's a high, but then it's lower than this high. So it becomes a lower high. And this is a new low that has been formed. This lower high made this new low, right? This lower high made this new low, but this new low is lower than this low. So this one becomes a lower low. This one becomes a lower low. And you can say that for the rest. This one also becomes a new lower low. This one becomes a new lower low. This one becomes a new lower low. But then this new lower low created another high because it is higher at this point. This is low, this is high. But this high is lower than this high here. So it becomes a new lower high. Same for this one. Same for this, becoming a new lower high. That becomes a new lower high. And then this becomes a new lower high. So for a bearish market, it's made up of just lower lows and lower highs. Do you understand? There's a high in the market, there was a low in the market. Now, this high created this low, and this low created this high. But this high is lower than this high, so it becomes a lower high. So anytime you're seeing lower highs and lower lows being formed in the market, you know that it is a bearish market. Anytime you see lower lows and lower highs being formed in the market, you know that it is a bearish market. Let's use this for example. If you come here right now, we're gonna take our path 2 and we're gonna this is a low, right? This low created this high, and it created this low. This high created this low. And a new low was formed, a new high was formed here, a new low was formed here, a new high was formed here, a new low was formed here, a new high was formed here, a new low was formed here, a new high was formed here, a new low was formed here, a new high was formed here, a new low was formed here. So you can tell that lower highs and lower lows are being formed. So because lower highs and lower lows are being formed, it indicates to us that the market is bearish. The market wants to go down. That is what the trends are. That's the indication of what the trends want to do. Anytime you're seeing lower lows and lower highs being formed, you know that the market wants to go down, means we're in the bearish market. Anytime you want to see, anytime you're seeing higher highs and higher lows being formed, you know the market wants to go up. Now, I want you guys to pay attention to something, right? Because when you look at the market right now, if you come here and you look at the market, it's made up of a lot of candles, right? Some of them going up, then it stays here for a little bit, then it comes down, then it comes up, then it goes down. It's made up of a whole lot of candles. But you don't have to be confused with that because it's the same thing, right? It's the same thing. There's no difference. There's no difference of us doing this, right? We're gonna copy this one. Let's copy this one and bring this one here. So this is a market that wants to go up, right? We go into the market, we're seeing that it's breaking highs, but it's not breaking the lows. So higher highs and higher lows are being formed. So we know that, okay, this market wants to go up. But then, like I said to you, the market moves in waves, right? So this thing can just become a part of the trend. So the market is like that. It's just made up of trends. It's made up of, sometimes it's trending upwards, other times it's trending downwards. So you have to identify how the market is moving and how you position yourself to be able to make money off the market. So it's not like you're going to have a trend where it's just going to be up, 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 up. Now, it doesn't work like that. Sometimes it's going up, sometimes it's going low. But don't forget as well that we spoke about consolidation market, right? So we say consolidation market, right? Let's bring this one all the way here. You can come here and then it gets to the point where it becomes like that as well. So we know that in this particular area or this particular market, we know that in this particular market, we know that the market was trending up at some point, and then it began to trend downwards at some point, and it got to a point where it was consolidated, right? So the market is full of ups, highs, consolidation. That's what the market is all about. So as a trader, what you're doing is that you're doing your analysis. Remember, we spoke about fundamental analysis and technical analysis. When you're doing your technical analysis, you're looking at the market to see an opportunity for you to, place yourself to see what the market is doing and how you can put yourself in a position to be able to get a piece of the market. So the market is made up of trending markets and consolidation markets. Trending markets, when it's bullish, it means the market is going up. And it's bearish, it means the market is going down. And it's consolidating, meaning the market is really confused, doesn't really know what it wants to do. Let me show you another one that we spoke about last week. This place. So it was going up, up, up. It got to this place. It consolidated for a while, and then it broke the consolidation point, and then it began to trend up. And then it was trending up to this point. And then this was the low that formed this high, but this low has been broken right now. So it brings an indication that the market wants to begin to go down. We don't know yet if it want to fully go down. So that's where obviously our strategy will help us to determine whether the market really wants to go down fully or not. I hope this makes sense, because it's very easy to understand. It's not difficult at all. It's not complicated at all. The market is made up of, from this point, we know the market is made up of the bullish market, it's made up of the bearish market. And we've got at times where the market is just consolidating, doesn't know what to do, right? Why did I spell consolidation like this? This is weird. Hold on, let me spell it right. Let me get the spellings right. Consolidation. There we go. Sometimes it's consolidated, so you don't really know. For a market to be bullish, the market to be bullish is made up of higher highs and higher lows. What is a higher high? What is a higher low? A higher high is when the previous high, is being broken by another high, and a higher low is when that low that was made from that high is lower than the previous low. So anytime you're seeing higher highs and higher lows in the market, is an indication to you that the market wants to go up. If you see lower lows and lower highs being formed in the market, it's also an indication to you that the market wants to go what? Wants to go down. And then sometimes, like I said to you, the market is just made up of these things all being put together. Do you understand? So it can be another one where this can come here and then continue from here, and then this one can come here and continue from there, and then it can be anything. It's not, this one can come here. Oops, sorry. Oops. What's going on? Sorry, guys. I'm trying to copy this. What is going on? I hate when it does this thing to me, Yeah, there we go. It can be like that. Then it can be there. Then it can continue to go down. It can keep going down. It can keep going down. Well, I hate it when it does this though. Yeah, it can keep going down. It can just keep doing that. Or maybe at some point, it can consolidate a little bit more. And then new highs can be made from here. Sorry. That is what the market is all about. It's just made up of just highs and lows. I mean, trending, bullish trending, bearish trending, consolidating market. That's what the market is all about. What did I just do? Okay, let's put this one back here. Then let's delete all of these ones. So what we're going to continue is something that I need you to pay attention to, because this is really going to help you to determine how you want to position yourself to make money off the market. We're going to talk about indication, right? So the strategy that we trade is ICC, which is indication, correction, and the continuation. This is the strategy that we trade. We trade indication, correction, and continuation. That is how we make money off the market. This is the strategy that we use. Every trader has got the strategy of how they do their trading. We've got ICT. ICT is where they have fair value gaps. They have all the blocks, all of that. People trade that strategy. People use like different strategies. People have their own strategies. They have their OP, they have the CLT. But the strategy that we are trading according to the market structure. So we are not coming into the market with we're not coming into the market to try the market to do anything for us. We're looking at the market and then we are seeing how we can make money off that. And the strategy that we are going to use to trade is what we call the ICC, right? Which is the indication, correction, and continuation. Remember, I said to you that anytime you get into the market, right, and you see a high and a low, and a new high is being formed, and you're seeing higher highs and higher lows, higher highs and higher lows, the market is literally telling you that it wants to go up, right? Don't forget that. The market is literally telling you that it wants to go up when you're seeing higher highs and higher lows being formed. If the market wants to go down, it's telling you that, listen, I'm trying to go down because you're going to see lower lows and lower highs in the market. It's an indication that the market wants to go up. Okay, now let's go to the indication part of the strategy. We're going to tackle the indication part of the strategy today. So let's take our path 2 and then let's create a high and a low. Right? Let's make this one green for now. So you come into the market, then the first thing that you see is a low. It's not going to be like this, but I want you to get the understanding of based off what we spoke from here, right? You see a high and a low. Remember what I said? Anytime a market wants to go up, it tells you that it's going to be higher highs and higher lows. Anytime you're seeing higher highs and higher lows, it's just telling you that the market wants to go up, right? It means that we are in a bullish trend. So if I come into the market and I'm seeing a higher low and a higher high, a high and a low, and then I'm monitoring from different time frames, right? And I'm seeing that this market, when it created this high, yeah, it created a new low. So this has become a new low. So the market has created a new low in the market. Now, this is very important for you to pay attention to. This low is lower, it's higher than this low. This low is higher than this low, right? So anytime I see a low that is lower than the previous low, which is higher than the previous low, in my mind, I'm thinking, okay, higher low, right? So I'm going to be thinking, okay, let me see what the next move is going to be. Is it going to give me another high, or is it just going to consolidate? So from here, is it going to give me something that's going to be higher than this high, or is it going to give me something that's just going to be here? If it gives me something that's just going to be here, it's not indicating anything to me. It's not telling me that it wants to go up, because this high right now is not higher than this high. This high is lower than this high. It means that at this point, with this particular candle, this point, this is a low, which is a lower high, right? So it means that this high is higher than this low, but it's lower than this high. So if it's here, it's an indication to me that the market is trying to be bearish, because guess what? It's becoming a lower high, right? So sometimes you have to pay that. You have to pay attention to that. But for now, I don't want to confuse you guys. For now, we'll get into that when we get deep into it. But just pay attention to that. That when a high is formed, when you get into the market and you see a low and a high is formed, and a new low is formed, but that low is higher than this low, it tells you that, okay, this is a higher low. So we just want to see what the next move is going to be. And that will tell us exactly what the market wants to do. So the indication part of our strategy is when this particular high that is being formed goes above the previous high. So we'll draw this line here. Let's make this one black so it's quite clear. So there was a low down here. There's a high that was in the market that has been formed. And this high formed a new low. But this low is a new higher low because it's higher than this low, right? But then anytime the market wants to tell you that it wants to go up, it means it wants to go above this particular high. And that's what we call the indication. So anytime the high is broken, it indicates to us that, okay, the market wants to go up, right? Anytime the high is broken, it's an indication that the market wants to go up. Okay, that's for a bullish trend or bullish market. Okay, so what I'm saying is this. Come into the market, there's a low, there's a high. This is being formed, and then this breaks the old high. So the minute this old high is broken, this particular move is indicating to us This particular move is indicating to us that the market wants to go up. And the reason why it's indicating to us that the market wants to go up is because it has broken, for a bullish trend, it has broken the previous high. That was a previous high, and that previous high has been broken. So the new high is an indication to us. A new higher high is an indication to us that the market wants to go up. But because this higher high has been formed, it also tells us that this particular one here is a higher low. It's a higher low. And the reason why it's a higher low is because this high is lower than this low, but then this high is also higher than, it's also lower than this high. That makes it what? A higher low and a new high being formed. So anytime a new higher high is being formed, is an indication to us that the market wants to go up. All right. It's an indication to us that the market wants to go up when a high is broken. All right, let's do that for a bearish trend. So anytime you get into the market and there's a high and there's a low, all right? This is a high, that's a low. And this is a low. Anytime you get into the market and there's a high and there's a low in the market, what you're looking at, you're looking to see what's going to happen, right? So if the market comes to this point, because this high created this low, and it creates another high, right? This high that is creating right now, this high is not greater than this high. But at the same time, this high is greater than this low, right? So we want to see what the next move is going to be. And then this high that was created here forms a new low. So this one then, because this new low has been formed, this becomes a lower low because it's lower than this low. And then this one becomes a lower high. It's a lower high because it's higher than this low, but guess what? It's lower than this high. So anytime you're seeing lower highs and lower lows being formed, that's an indication to you that the market wants to go low. But the ultimate place of indicating to us of what the market wants to do is here. Because this low has been broken by a new low. This low made this high, and this high came all the way to break this low. It could have got to this point and decided to go back it up again, but then that's not what happened. It broke that low. So the minute it breaks this low, you should just know that, okay, this is what the market is trying to do. The market is trying to go low. Let's delete this whole thing and then I'll show you something on the actual charts. So bear with me 1 second. So when you come into the market and you're seeing things like this, the minute this low is broken, and a new lower low is being formed, is an indication that the market is trying to go low. All right. Very important to note. Very, very important, because that's going to form. If you don't get your indication right in the strategy, you're going to make mistakes. So don't forget this at all. High on the bullish market, anytime a high is being broken, is an indication to you that the market wants to go up. Anytime a low is being broken, is an indication to you that the market wants to go down. Now let's use this for example. This was a high and this was a low. This was a low, this was a high. Broken, a new high being formed, indication the market wants to go up. And then when a new high was formed, broken, a new high being formed, right? This new high was formed, indicating to us that the market still wants to go up. And then it got to this point, and the higher low was formed, but it went back and it broke it again, right? So anytime like higher highs are being broken, it just indicates to you that the market wants to go up. For example, here, this is the low, broken, a new low being formed, indication the market wants to go low. A new low being formed, indication the market wants to go low. This low was also broken, indication the market wants to go low. This low was also broken, indication the market wants to go low, right? So anytime new lows are being broken, is an indication to you that the market wants to go low. So that's the first step in the strategy. The first step is indication. It means that anytime you get into the market and the market breaks any swing high or swing low, is an indication that the market wants to either go up or go low. Now, there's something called swing points, right? So swing points are either the highest or the lowest points of the market. So, for example, this is a swing point, it's a swing high, right? This is a swing high because that's the highest point of the market. That's the swing high. That's a swing high. That's a swing high. When it comes to swing lows, this is a swing low. 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 That's a swing low. So a swing high or a swing low is the highest point or the lowest point of the market. So the highest point of this place is going to be this point, right? So this is a swing high. The lowest point is this point. That is a swing low. So swing highs and swing lows are the lowest points of the market. Let's add that to our notes. Swing highs and swing lows are the lowest points of the market. Swing highs and swing lows are the lowest points of the market. That's something that you should pay attention to as well, because at some point I'm going to explain to you how useful that is. It will help you to, make a lot of, good decisions when you go into the market. All right, cool. Let's go into the market, actual trend, and then let's see how we can, make some of these points clear. Let's use this one now. Yeah, let's use this. Okay. So this is the 1 hour time frame. On the 1 hour time frame, there's a 4 hour time frame, but we're going to stick on to the 1 hour time frame. So if you come into this market right now, remember that I told you that sometimes the market doesn't know what it wants to do, right? So for example, this particular one, I can tell you that at this point, the lowest point of the market is this point, right? At this point, forget about everything that's happening here, but at this point is the lowest point of the market. At this point is the lowest point of the market. But this low came from this high, right? Because remember that if the market is goes up here, comes down, goes up, came all the way down here, and it went here, and it came here, and it went there, right? So this part is low. This is the lowest part of the market. Because usually I use the body close, not the candle wick. So this is the lowest part of the. Actually, let me use another one because I don't want to confuse you guys. Let me get a clear one for you guys so you can. No, let's see a clear one. Yeah, this one. Yeah, I think this one should be fine. Okay. So if you look at this thing right now, the highest point. Just actually, let's do something. Yeah, I want to make it very. I want to find a particular one that is clean that you guys will be able to. Yeah, let's do this. We're just gonna draw a box around this area. We're gonna just consider this area. Yeah, we're just gonna consider this area. So for today, we're just paying attention to everything in this particular box, right? So if you look in this box right now, the highest point of the market is this. That's the highest point of the market. So that's going to be our swing high for this particular session from here all the way to here. That's the highest point, right? So that's going to be our swing high. Now, if you look at the whole thing, the lowest point is going to be this particular one as well. So this is our lowest point of the market. This is our lowest point. So that's a swing high. That's a swing low. But then you have to also know that this is the high of this particular box in general, right? But then if you take your path tool and then you begin to draw the lines, you'll be able to identify a lot of highs and lows in this particular market, right? Let's leave this here for now. So this is the lowest point of this particular area, right? And this is the highest point. So swing high, swing low. But then at the same time, you'll be able to see that there was a low here, there was a high here, there was a low here, there was a high here, there was a low here, there was a high here, there was a low here, there was a high here. So this big area of swing highs and swing lows have got different highs and lows in between them as well. Do you understand? So it's very important that you identify where your highest point is, where your lowest point is, and if any of your highest points or lowest points have been broken. If any of them have been broken, then it's an indication that the market wants to do something. It's either it wants to go up or it wants to go low. So at this point, this is the highest point, right? Let's draw this line across, right? Let's see what happens. If you draw this line across, you can tell that when the market got to this point, let's draw this low up across as well, so that you understand what I'm saying. So if you draw this low across to this point, and you continue this low, this was the lowest point of the market. That was the highest point of the market. So the low was not broken, the high was not broken until this point. Do you understand? Until this point. So the minute you are working on any trade or any pair, right? The minute that highest point is broken, it tells you that the market wants to go up because the highest point in the market has been broken, right? Remember what I said? The market always moves in waves, right? So it was there, came here, came there, went there, came back here, went there, came here, came there, came there, and it broke that high. This was the last high that was formed. That was the high, the last higher high that was formed. But then that higher high has been broken now. So the minute a high is being broken, you have to identify that to be an indication of where the market wants to do, of what the market wants to do. That is an indication. That is an indication. Do not forget that. An indication is anytime a swing high or a swing low is being broken. So for this particular example, the swing high, which was this point, was broken, and that's an indication of where the market wants to go. Let's find another example of where a swing low was broken, and then so this is an indication that the market wants to go up, right? So see what happened. Okay, great. I think this is a great example actually. So the market was trending at this point. Obviously, it's a little bit consolidating over here, but you can still make some trades out of this point. But then you can tell that this was the high, this was the low. The lows were not broken. The support was strong. It was keeping the market. It means that a lot of buyers were here. At this particular point, a lot of buyers are here. And the reason why a lot of buyers are here is what we spoke about in our first lesson, right? I told you guys that anytime you get into the market, any place where there is market, there are buyers and there are sellers, right? So if you come to this point, the support, right? We've got the resistance and the support. At this point, anytime the market came to this point, it went all the way to the top. Anytime the market came to this point, it went all the way to the top. Don't get confused with what I'm saying at the moment. I'm just trying to explain to you where sellers are and where buyers are. Anytime the market went to this place, the buyers were strong, so they kept the market up. It means that the resistance or the support was strong. So the market kept being up, right? But then when it comes to this point, it also tells you something. It also tells you that, sellers may be at this point, because when the market went all the way, it was moving from this point, right? When it got to that point, sellers were strong, so they sold the market all the way to this point. And when they sold all the way to this point, they got to this point, they met buyers with more money, right? So those guys with more money decided to buy the market all the way to the top, right? And sellers tried to push it down again. They did, and then obviously they came back to this point, and then the buyers were very stronger than them. So they kept moving the market up onto this point. But then when they get to that point, which is also the swing low point, the sellers were not strong enough. The sellers were not able to sell the market back to this point. Remember, the sellers have been selling the market. They've been selling the market. But when they got to this point, they didn't have any strength to keep the market from buying. The buyers had more money than them. So guess what? They broke that swing high. So the minute they break that swing high, you should know it's an indication that the market wants to go all the way up, meaning that at this point underneath this point are sellers, but then anything above it is buyers. So this point can also change at this point to become a buyers. Buyers have taken in charge now. So that's what the market is all about. The market is also filled with resistance and support. Support is when the market is creating support for the buyers to say that, okay, will be able to keep the market afloat. If it gets to the resistance level, if it doesn't break the resistance level, then obviously they are telling you that the market doesn't want to go anything above it. Do you understand? So don't forget that the market is full of buyers and sellers. The buyers will serve as a support for the market. They are always trying to keep the market up. As sellers always keep a resistance to the market, they are trying to sell the market all the way down. Like I said, this is a great example for us to actually do the indication. So remember what I said, this was the highest point of the market, that's the lowest point of the market. When you got to this point, the highest point was broken. And that's an indication of what the market wants to do. The market wants to go up, right? And then when the market broke to go up, it created a new high here, and a new higher low, and a new higher high, and a new higher low, and a new higher high, and a new higher low, and a new higher high, and a new lower. What's this one? This is going to be a low, but this low is lower than this low, right? So this is a new lower low. So then the minute a low is broken, what's an indication? It indicates to you of what the market wants to do. The market wants to go down because this was the last low that created that high, but that low was not able to sustain itself. It means that there were a lot of sellers who were pushing the market to the bottom, right? So when they sold the market up to this point, there wasn't enough buyers to keep the market up. So it broke that low. The minute that low is broken, the minute this low is broken, that is also an indication of where the market wants to go. It means that the market is planning to go all the way down. So this is the lowest point of the market at this point. But then that point was being broken by this new low. So guess what? This becomes a new lower low. So let's see what happens then. If a low is formed, let's see what happens. So this is a low and that's a high. But guess what? Another low was formed, another high was formed, and a new lower low was formed. Right? That's another indication of where the market wants to go. Then a new lower low was formed. Another indication the market wants to go low. Then a new lower low was formed. Do you understand? So anytime lows are being broken, that's an indication. So this low that was broken from this point, was an indication to us that the market wants to go low. Let's make it very clear here. Let me make it a little bit bigger and cleaner here. So this was a low that was formed in this market. This was a low, right? But this low was broken. Sorry, guys. So this was the highest point of the market. If you look at this particular area here, this was the highest form of the part of the market. That was the highest part of the market. But this high, this low formed this high. This was a low, right? This was a higher low. This higher low formed this higher high, right? So don't forget, this was a higher low, right? This was a higher low. That low formed this high. But guess what happened? When this higher high was formed, because in your mind, if you want this market to go up, you're looking for another higher low to be formed. But this time around, a higher low was not formed. The low that was formed before was broken. The low, this was a low, this was a higher low that formed this higher high. But this higher low, this low was broken by this new low that has formed. So this then becomes a lower low because this higher low has been broken. But remember what I said to you, that bullish markets are made up of higher highs and higher lows. So the minute you're seeing higher high, higher low, and lower low, you have to be thinking, what the hell is happening? So this is an indication to you that the market wants to go low. Remember, this is a high, this is a low, this is a swing high, this is a swing low. The point of the market. So anytime a swing high is broken, so if this market came to this level and then went this way, then we know the new higher high is being formed. But that's not what happened. It broke that resistance level. It broke that low. It broke this low. The higher high was there and it broke this low. This was the low. It broke this low and it formed a new lower low. And the reason why this is a new lower low is because this low is lower than this low. So this then becomes our indication. Because we are seeing lower low, it's an indication to us that the market is trying to do something. We don't necessarily know what it wants to do, but it's telling us that it wants to go down for now. because it's indicating to us of the direction it wants to go. But then the only reason why it becomes a complete bearish movement or market is when a lower high is formed, right? So when this lower low was formed, a new high was formed, which is this point, but this high is lower than this high. So this high right now becomes what? A lower high. Remember what we said. Anytime you're seeing lower highs and lower lows, guess what's happening? It means that the market is planning to go low, right? That's what we said, right? If we go back to this point, where is it? Yeah, there we go. If we go back to this point, we said that anytime you're seeing lower highs and lower lows together, yeah, if you're seeing lower highs and lower lows together, it's an indication to you that the market wants to go low. And that's exactly what we saw here. It was a higher low here. There was a higher high. A new lower low was formed, but guess what? A new lower high has been formed here, meaning that the market is telling us that we want to go low. But guess what happened again here? This new lower low that has been formed, it also got broken, forming another lower low here. Do you understand? That's what the market is all about. That's what the market is all about. It's either breaking lows or breaking highs, or it's either consolidating. But then anytime you're seeing higher highs and higher lows being formed, that's an indication to you that the market wants to go up. If you're seeing lower lows and lower highs being formed, it's an indication to you that the market wants to go low. Anytime a swing high is broken, you get the indication of where the market wants to go. So this was a swing high. That swing high was broken by this new higher high. It tells us, it indicates to us an indication that, okay, this market is trying to go up. So we have to just begin to pay attention to see how we can actually position ourselves to make money. So for today, we've gone through the trends and everything. I've showed you what indication is. Next week, or whatever time that we meet again, I'm going to tell you about how the correction is, the continuation is. And I don't want to bombard you with so much information because sometimes, you need time to, reflect on all of these things and then get to understand it. Do you understand? Did you get to understand it? So for today, this is all we're going to do for today. This is all we're going to do for today. I hope you guys enjoy. Watch this. I'm gonna put the video in the chat. So watch this video as many times as possible. I keep saying the reason why I'm doing this is because I want to equip you guys with this tool that you can use as a hobby. If you don't want to make trading your full-time thing, you guys have got other things that you want to do. But this can be something that you can make money off anytime you're less busy. If you want to make it as a hobby, you can just make this one like something that you can always, make money off with. So my duty is for me to equip you. It's going to be your responsibility to sit down, to study, to get to understand it. And then the minute you practice all the time, you study the markets all the time, you'll be able to understand it and even trade it in your own way that makes you the money that you're looking for. I'm not charging anybody for this. A lot of people pay a lot of money for this. I'm willing to, spend this time with you guys to ensure that I equip you. I know sometimes when you do things for free, people don't take it seriously because you're doing it for free. But that's why a lot of people charge a lot of money to do these type of things. But I don't want to charge something. I don't want to charge you guys anything for this. I want to offer it for you for free, and I want you guys to be able to, study it, use it, and then make a lot of money doing it. So yeah.